Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Well, Russia's now invaded Ukraine. What's that going to do to the stock markets? We've already seen what it's done to stock markets across the planet, but what's it going to do from here?
Well, I see the Ukraine issue as just, the next chapter in the playbook, if you will. It's kind of interesting to me to as COVID petered out, the Ukraine thing kind of escalated, and then just as equities are really starting to, break some structure, the invasion or whatever happened last night, happened. With equities, there are some structural issues, no question about that. I've covered this in great detail in the updates and more recently in the research letter, but until this structure is mended, equities are at high risk here. That said, I think we're moving into some shorter term cycle lows where we could bounce, but in the bigger picture, there's some structural damage has been done now. And this 4-year cycle top, it is indeed an opportunity to prick the biggest bubble in history. No question about that. If that's to be the case, though, we need to see a bigger decline than anything we've seen since 1929. Otherwise, it'll just continue blowing the bubble because we really haven't done anything with these previous corrections, but let a little air out, and then it just it just continues. For example, I calculated some numbers. In 2000, we had a 39% decline. In 2009, it was 50. I can't read my own writing. 51 or 54%, and in 2020, I think it was 38%. So, but if we're really going to truly prick the asset bubble, then we got to see something greater than that take hold. And structure is now in place. So, how it plays out, I'm not sure. That's what, that's the next step. With interest rates, I think, we're in this is kind of an interesting crossroads, if you will, right here as equities are trying to top in what's going on with interest rates. I think they definitely waited too long, to raise, and that they didn't want to raise because looking at my Fed model, they should have already done it. And they didn't. And the fact that they're jawboning and talking about all the rate hikes that they're going to make, well, why didn't they do it? Because there's evidence that they already should have, and the fact they didn't actually take the action tells me that I don't think they really want to. Also, looking at my Fed model, this may not make sense, but it's crystal clear when you look at it. It suggests that we're at the beginning of the end of a rate hiking cycle, and they haven't even raised yet. And so that also is telling me that obviously they waited too long. And I suspect that they may be forced to make a hike, which then caps the rate hiking cycle altogether. The one caveat to that is, if short-term rates with equities peaking and the flight to quality type thing, and the rates are off some today, but if short-term rates turn back down significantly here, then they may not even make the hike. And so looking at the model and the data, what that would tell us is that we went through a hiking cycle. I know that makes no sense unless you saw the model. Well, I covered it in the letter. You can see it in the letter. Look at it. But without even making a raise or without making a hike. So it's an interesting situation here. And then the peculiar situation this puts them in is, in turn, as we're seeing this top in equities, we have the situation with interest rates, and there's no room really for them to lower. as they did in 2000, 2007, and into 2008, and even in 2020. They had some room beneath them where they could cut. And here, this is happening. This top in equities is trying to take place with rates still in the, discount rate is still set at 25 basis points. So it's happening from a much, much lower level.
Right. So if the Fed had to prop up the economy, they have no way to do it. They can't lower rates to help out.
They can't lower rates to help out. And I guess they could, do their QE tricks and other hat tricks, but, cutting interest rates is not going to be an available tool, even if they make one hike. And like I said, I'm going to stick to that because the data is clear when I look at this model. And like I said, I covered it in the letter. I hope you'll look at it, or maybe you already have. But it suggests this is the beginning of the end of a rate hiking cycle, and they haven't even raised.
So what are the implications of that? Does that mean the real estate boom continues because mortgage rates will remain low?
No, I think it's telling us, as I read it, I think it tells us that, I think it gets back to the interest rate fallacy, that the demand for money is not there. I think it's a state of the weak economy, and that perhaps, I preface this too. I mean, I go to the grocery store like everyone else. We were talking just before we came on the air about, the shortages that we're seeing and that sort of thing. And so I know there's been a tremendous run up in the cost of everything. But looking at this interest rate thing, it almost suggests that perhaps there is somehow, some way, I don't know how these dots connect at this point, but that there's the demand for the goods, or the economy collapse, or a deflationary spiral, or something takes hold perhaps to cap these runaway commodity prices that we've seen. Otherwise, why would rates not be going? Rates should be going up. So they're telling us something. They're telling us something contrary to what we're seeing. Now we're seeing what we're seeing, but they're sending a different message. And so one or the other is wrong. I'm going to bet that interest rates are right. I think that's telling the true story.
So, I know they always say high interest rates are the cure for high inflation, but is that the truth? Because I've also heard the saying, the cure for high prices is high prices. It doesn't matter what the central banks do.
Therein lies another fallacy, but, generally speaking, in inflationary periods, true inflationary periods, long-sustained inflationary periods, you're going to see higher rates, and we're not seeing that. And like I said, I have to go with interest rates telling the tale here, and the fact that there's hard evidence that we're at the beginning of the end of a rate hiking cycle and they haven't even raised. I think interest rates have it right. And so I can't, I don't know how this is going to play out. I can't explain what I'm seeing, but I think what this is telling us, as best I can connect the dots from what I am seeing, is that this tremendous run-up that we're seeing in commodity prices, the inflationary impact it's had on everything, should be moving into some sort of an end and some sort of relief.
Now, the conflict in Ukraine is going to cause problems, no doubt, in some supply chains. Ukraine, Russia, 25% of the world's wheat comes from there. Ukraine supplies 80%, I think, of the world's sunflower seed oil. And a lot of commodities come out of both countries as well. And those, there could be sanctions, counter sanctions, and so on. And those always result in a tighter supply chain. So down the road, does this mean we can still look forward to, and I'm not really looking forward to, but can expect higher food prices and higher energy prices?
Yes, I agree. Absolutely, 100%. And so that sounds contrary to what I just said, but in other words, what I'm saying is I don't think there's a time lag. I think interest rates is telling us one story. I think it's looking ahead. It's looking over the horizon. It's telling something. In the interim, yes, you're 100% right, and I agree with you wholeheartedly. I'm looking at prices escalate just every time like you said, every trip to the grocery store just about. Every time you go to get anything done or buy anything, it's higher today than it was yesterday. So yes, and obviously, if this thing in Ukraine escalates, I expect to see the trickle-down effect from increased supply chain issues. I agree 100% with that.
I guess baseball players would be affected the most by a shortage of sunflower seeds.
Yeah, I guess so. That and little kids, we used to chew them on the
Yeah.
and I like fake chewing tobacco when we were kids. All the boys would.
Yeah, and the major leagues have now banned chewing tobacco, so it's either chewing gum or sunflower seeds.
Huh?
For some
banned
reason,
chewing
they're
tobacco?
the only athletes who need to chew while they play.
Huh? They banned chewing tobacco on the baseball fields?
Well, it's so messy. They don't care that it's giving the players jaw cancer, but it's really bad on that artificial turf to clean up.
I get it.
Yeah.
Yeah, I wouldn't want to. I wouldn't want to scrub up chewing tobacco spit off of artificial turf either.
Yeah. A former Major League Baseball player came to visit Vancouver to convince kids, look, smokeless tobacco is just as bad as real tobacco. And he says, I'll show you why. And then he took off his face. It was all a prosthetic because he got jaw and, mostly jaw cancer from it. And Sigmund Freud, who was a big cigar user, he got jaw cancer, and the bottom half of his face was an artificially clipped on with magnets prothesis, and his wife would lovingly clean all the tobacco crap out of it every night.
Oh, my God. I did not know that.
Oh, yeah. See, the things the tobacco industry doesn't want you to know. And this is a guy, the baseball pitcher, he was 25 years old when he was diagnosed, and he was just, copying all the baseball players he admired.
Well, when I was in junior high and high school, all the boys, there were probably more guys that dipped Skoal, chewed tobacco, than smoked. It was just a popular thing in that time.
Well, moving on to
yeah, we
other
digress,
juicy
right?
subjects. Energy, again, Russia, a major producer. The first thing Europe saw was a 30% rise in their natural gas prices overnight because obviously Germany is going to stop the construction of that major natural gas pipeline from Russia, and that means more LNG sales, I would think, from the U.S., because you have the port facilities to do it in Louisiana.
Yeah, and like I said, in the interim, I think this is going to probably, it looks like going to be, more fuel to send commodity prices higher. But, overall, as these commodity prices increase, I think it's a tremendous burden on the economy. The so-called recovery or lack thereof. But you know what I'm saying. And so it's just another tax, if you will, another hill for the recovery to climb. And I think it all climaxes, and that may be what interest rates are telling us, is that this all climaxes, and like I've said all along, it all comes down together. I think that's what interest rates are telling us. But in the interim, I agree with you. I mean, until we see some structural evidence, some cyclical tops and that sort of thing, and evidence of those tops, the commodity advance is intact. But once it turns and we get structure, then I think it's going to be just like, 2008 is a perfect example. Equities peaked in 2007 in October, and I think it was in July of 2008, commodities peaked, but it all peaked together. And some of the front running stuff that I'm watching with commodities is telling us that, it's agreeing with what I'm seeing with interest rates. For example, the Baltic Dry Index, it's leading this turn big time. And so I think this is a tremendous run up into a mega top in commodities.
Mm-hmm. And what's happening with the Baltic Dry Index, the indicator of what's being shipped around the world in ships?
Well, it's the evidence there. It's been suggestive. There's a 3-year cycle there. It's been suggestive for, months, that 3-year cycle is turned down. And the lead time with those cycle tops can vary. They trickle down into commodities, but even there's even some of the raw materials indexes are now leading that turn. And so this is all telling us that we're running, like I said, I'm sticking to that we're running up into a top. Now and again, to clarify that we have to see some structural evidence bite to give us the turn in commodities, but I do think that these leaders are telling the story, and it's confirming what I'm seeing with interest rates.
We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. In Russia, the ruble has dropped dramatically in price. The Russian stock exchange, I think, lost 45% as well. They have a huge run now on foreign currencies. What's that going to do to the U.S. dollar, and will they have access to U.S. dollars with all these sanctions now?
You know, I don't know about the access to U.S. dollars. I saw some stuff recently that says that there is a dollar shortage. There's liquidity issues, which may be part of what's going on with the weakness that we're seeing with the markets themselves. As far as the dollar, you know, I have some cycles that are due, some cycle lows that are due. But overall, my expectation for the dollar is, you know, I maintain a bullish stance on the dollar. I have, and I continue with that stance. I know that's contrary to everything everybody is seeing and saying. You know, the popular belief is the collapse of the dollar, and maybe so, but not yet. I don't see it now. You know, we had a 4-year cycle low, and we're still, when I forget now when it was, 2021, maybe, yeah, January of 2021. And, you know, there's the structure there is very positive. I think any decline in the dollar is counter trend and up and away.
Should gold be taking off in troubled times like this?
I think that's what we're seeing is a fear trade in gold. But again, I think just like the rest of the commodities, and just like in 2008, I think it's pressing into a major top, or in this case, so far it's retesting what was the 9-year cycle top, and I think that gold and ultimately turns down with the rest of the commodity complex.
Of course, everything is timing. Are people bailing from stocks because they expect the market's going to fall and they want to be able to buy that lower price, and just how low could prices go?
Well, like I said, I think that we're approaching some sort of cycle lows in equities, and there's going to be a bounce. I don't know that we're quite there yet. Maybe we're getting close. But as far as the longer-term effect, I mean, there's some severe structural damage that's done. And like I said, this is potentially the top. I mean, how do I say this? This 4-year cycle top is an opportunity to unwind this bubble. And think about it this way. If we put enough stress on equities here, then is the stress enough to break the back of the bubble? Is it, you know, that's the test. I don't know if we, you know, flip a coin. We don't know that. But this 4-year cycle top is certainly going to be that stress test. And if it does break the back of the bubble, then I think we see something greater than what we saw in, you know, going back with all the corrections of modern times, 87 and 2000 and 2008 and 9 and even 2020. I think we have to see something much greater than that. And so that is the potential that we face here.
Supply chain issues started with the COVID thing 2 years ago, and there doesn't seem to be any relief in sight. They've told us that the car computer chip shortage could continue for a year or two, or maybe be permanent. Or is this just an effort by the car industry to really jack up prices?
You know, I haven't all the way figured that out, but let me tell you what I do know. And I don't remember from show to show what we talk about, but I have friends, that have dealerships, car dealership, local car dealership. I have friends in the performance, you know, automotive performance, business, and, you know, I have a hot rod myself, and so I'm somewhat in tune. I have a buddy that has an automotive parts store. And, you know, it's pretty sad when the dealerships, I went to the dealership the other day and I asked my friend, I said, look, how's the supply chain issue? What's going on with parts? Is it better or worse? And he said, worse. And he was telling me that, you know, they had to go, now this is a dealership, and they had to go to the aftermarket. They had to go to one of the, you know, aftermarket supply houses to get a radiator hose. And so I researched that. This is new. So, just in out of curiosity, I checked just parts availability on my own vehicle, and the top radiator hose, for some reason you could get the lower radiator hose. The top radiator hose from Gates and from AC Delco is on national back order. You can't buy it. And so that's crazy. And then I talked to a lady that runs manager at one of the local parts stores, and she told me that a lot of the diesel fluids and filters and lubricants they can't get. And, it's kind of hit and miss. You mean one thing they may have, the next thing they don't. Aftermarket starters and alternators they got, factory stuff, nope, don't have it. And so it seems like it's affecting more of the factory genuine, GM and genuine, I don't know so much about Ford, but genuine GM and Chrysler parts.
And of course, both of us drive older vehicles. How hard is it to find parts for those?
Well, it depends on what you're looking for. Like the lady at the parts house, she told me, she said, some vehicles, she said, we have no problems with the common stuff like brakes or rotors or, that sort of thing, filters. And she said the next vehicle, you may, like diesel. She said for some reason, some of the diesels were, like Rotilla oil in some of the filters. They said they can't even get it. So I guess it depends on that, that vehicle. People might just want to check and, common things. I don't mean to be an alarmist, but common things like brakes and, oil filters to have on hand. You go get your oil changed and they don't have an oil filter. I mean, that's not likely. But again, it depends on the vehicle you drive, and we're seeing that. I mean, when you go to the dealership and they don't have a radiator hose for your truck, that's a little bit concerning to me.
Well, oil filters are paper, and there's a paper shortage. My wife is a writer, and her fellow writers are complaining they can't get books published and printed because of a paper shortage.
See, I hadn't heard that. That's crazy. I mean, why? Why is everything unilaterally affected? Everything. It doesn't matter. I have now I don't know lately, but I talked to another buddy who has a tire supply place, and he was telling me, he said it depends on the tire. You have a flat, blowout, whatever, you need a tire, you assume, you just go down to the local tire shop and get a new tire or a set of tires, but you can't even assume that anymore. I don't know how the tire thing, I hadn't talked to him recently, but probably 6 or 8 months ago, that was an issue. Batteries. Some batteries, I may have told you this story before, I needed a lawnmower battery. I go to a place where they sell interstate batteries, and the guy calls the supplier, I hear him on the phone, that battery, he said, don't have it, don't know when I'll get it. So it's hit and miss, and I don't understand why it's just like I said, it's unilateral, and that is concerning. Where's the breakdown? Why? This far into this, why? Why is it still going on?
That's very interesting. Tim, now gold, everybody expects that to go up in price, and the price of gold itself went up, but people still aren't really all that interested in the mining companies that make it. Do you have any idea why that might be?
I think the mining companies, just like interest rates, are telling us, trying to tell us something about the inflationary run-up. I think that the miners are trying to tell us the same thing about gold. I think what we're seeing is a little, a fear trade here, but I think the underlying play at hand, if you will, is a press into major tops with everything.
And of course, you have no idea about the timing of, okay, when is this top stop? Because, or has this invasion been the trigger for it? We don't know.
Well, no, the top, it depends on what you're talking about. The top with equities it's been taking hold. It's been setting up. It's been taking form, been covering it in the letter. Okay. How it progresses, that's another story. I mean, every day you get a new bar, so there's new data every day. But with equities, yes, we have structure. With commodities, not yet. But we are seeing some leaders. And so it looks like, I think, when I say leaders, the BDI, some of the raw material indexes and so forth, they're starting to non-confirmations. They're starting to warn us. I don't know how else to say it. So, just like what you mentioned with, the miners, that non-confirmation that we're seeing is a warning. And so, it's telling us, take heed. But until we see hard structure with gold and the commodity complex, I don't think we're quite there yet. And I'll see structure when I see structure. I don't know when that will be. It'll appear when it appears. And then I think a turn will be at hand. And I think ultimately, like I said, I think everything's going to set up just like with 08, 07, 08, where it all comes down together.
So many of the people I've talked to say the setup right now looks a lot like the .com crash in 2000. Would you agree with that?
I don't know that I see I'm not dismissing what they say. I don't know. I haven't looked at it from that perspective. But if they're talking about the size of the bubble, or unwinding of a bubble, then on the, superficially I say yes. But I think this is, as far as the size of the bubble, I think this far exceeds anything. I think this exceeds the 29 bubble. This is historic. This is absolutely historic. There's nothing that compares. Several letters ago, I did an analysis. I got some dollar figures from the South Sea bubble, and I think this was like, monetarily, this was like 6,000 times bigger than the South Sea bubble. There's nothing compares to this, but yet everybody thinks it's normal, and it's not normal. So, each market has to set up on its own, and the setup has begun with equities. So where we go from here, that's the ongoing thing that I'm monitoring in the short-term updates and the research letters.
Now, natural gas, again, in Europe went up 30% overnight because Russia was their biggest supplier and sanctions might stop that. Would natural gas be something for people to look at, or is that such a volatile market you can't do a long-term investment?
No, it's just like any other. A chart's a chart. It's just like any other investment. But, again, my fear with looking at the long side of commodities here is catching a train after it's left the station, as you will. And in fact, I'm thinking it's approaching its destination, and that being major tops. So I understand the fear factor. I understand everybody thinking, and I'm not saying that we're at that top yet, because I don't have structure specifically, and I'm not looking at a chart of natural gas, but I think as a rule that all commodities are pressing into a top, natural gas included.
Tim, what's your overall message right now?
This is a very let me think about that a second. This is a very unique crossroads for the financial world, because we are seeing structural issues with equities at the top of the biggest bubble in history. And then we have, like I said, the situation with interest rates, and I know that may not make sense, but if someone is reading the letter or looking at it and sees it, it makes perfect sense that it's happening at the top of a rate hiking cycle where they haven't even made a hike yet. And so it's with it occurring from a lower plateau, if you will. It's just a very unique situation. And then when you look at the crippling of the supply chain, issues that we've seen, and knowing what's going on, seeing what's going on in Ukraine, not knowing how that's going to go, and then facing the financial downturn that I think we ultimately face, that could just finish kicking the legs out from under the supply chain. It's really a dangerous spot in time, technically, and just in time in general. This is just a very unstable environment, and they've done a magnificent job, like I said, of trying to hold it, but in the process they've made a ginormous bubble like we've never seen before, and it has to unwind. And I think that's what we're seeing here is we're seeing that trying to take hold. And so how it develops, we don't know, but it's happening.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.